Happy New Year, everybody! 2018, January, it's crunch time, HR people. So yesterday, I went over all the way to QC. I live in Taguig, by the way. I went over all the way to QC at the BIR National Office. I was there for an event scheduled at 8 a.m., but 7:30, the venue for the event was overflowing. A lot of people were already sitting outside of the hall. BIR had to open a second venue at the gymnasium in the compound. What was the event? It was the public consultation hosted by BIR on the tax reform law. Now, like 99% of the entire HR and payroll champion population of the Philippines, I'm sure you've had your eyes on the BIR website or on the Train Tax Reform Facebook page, all waiting for the implementing rules and regulations of the new tax changes. Okay, now this video is actually to talk about interesting points that are covered by Train, which affect HR champions and payroll masters and all employees alike. I'm sure you have a lot of questions, and we'll try to tackle those segment by segment in this series of videos. But to start off, I'd like to share 3 general points that can actually hit most of the questions that we're asking. The first point is a common question for employees and HR champions and payroll champions alike. Will my first payslip in 2018 reflect the changes brought about by the tax reform? Simple answer there, ladies and gentlemen, is yes, it should. If it hasn't, you better connect with your HR department. Now, HR champions and payroll master champions are actually used to waiting for what we call the implementing rules and regulations before enacting any changes on taxation. In the Train's case, Section 84 of the law actually contains the law's implementing rule. So it's what we call a self-executing law. You can find the complete script, the complete text of the law on the Philippine Gazette site and also on the BIR site. Now, because Section 84 talks about the implementing rules and regulations, it also says that the deadline for implementing it is January 1st, 2018. Now, that being said, every schedule now changes, okay? Because we have implemented it January 1st, or the government has implemented it January 1st, it follows that the quarterly filing of income tax returns for tax year 2018 was announced yesterday in the forum to be May 15th of this year. I'm sure that's enough to send a panic attack to payroll departments in all companies, okay? So you have April 15th this year to file for the annual income tax returns of 2017. Yes, you heard me right. May 15th, the following month, is the deadline for first quarter income tax filing for the year 2018. I can hear you right now. Everyone's going 30 days in between each filing. The answer to that very strict timeline yesterday from BIR was in between those timelines of April 15 and May 15, they will be releasing more announcements into the process of filing for the quarterly taxes. One thing that comes up there is, will we be using the same kind of forms? Will we be using the same online portals for those of you who use EFPS for BIR? There was no definite answer to that yet as of yesterday. A clear answer was that in between April 15th and May 15th of this year, BIR will come up with more definite procedures for that. So my take would be, this is the time for all HR champions and payroll masters to keep a vigilant eye on the BIR website. Let's crash that website. I just hope that the IT people over there have their servers ready. It's often the case in the Philippines. Well, that's for travel airlines at least. The moment the website becomes hot, it could crash. Champion to keep your eyes on the website for all announcements moving forward. Okay? So one particular form that was discussed yesterday was the form to update employee information or employer information. Do we still use the same kind of form? Given that on the train, tax statuses are now scrapped. Okay? Again, quoting BIR, we will be coming up with more definite procedures in the coming weeks and days between the filing schedule of taxes. So as much as I would like to have yes or no black and white answers for you right now, I'm part of the same population waiting for answers, keeping their eye on the website, keeping my ear to the ground for the company and for the employees. Second point of discussion along with train is that BIR is actually reaching out to the private industry to help in communicating train to the employees. I guess the disconnect here comes from what we see on social media, comes from what we see on the news, comes from what we see from a PR perspective versus what is now available in BIR. Okay? So a question yesterday was raised that a lot of companies now have told their employees, no, we are not implementing train because there is no IRR. Again, going back to what I said earlier, the IRR is contained in Section 84, which means train is to be implemented starting January 1st, 2018, whether we like it or we like it. Right? So the main point right now that we would have to communicate to our employees or to our team members is that train abolishes all tax statuses. Whether you're single, you're married, legally or not, 1 dependent, 2 dependent, 10 dependents, it no longer matters because taxes are now calculated very straightforward based on your annual taxable income, which is categorized now into brackets according to the new tax table. Okay? The de minimis benefits, as confirmed yesterday with BIR, still exist in the train law. The exemptions or the tax exemptions for 13-month pay from the previous table of 82,000 has now confirmed to be raised to 90,000. Not 120, not 150, but 90,000. That combines the version 1 from Congress and version 2 from the Senate. Okay? It's often asked on social media, a lot of episodes on TV, a lot of talk shows have actually asked the public out there about their opinions on the train law. And a lot of opinions have said it's unfair, it's anti-poor, it's pro-rich. Okay? BIR's take there actually is that their department is the implementing arm of the law. And complaining to BIR about the unfairness of income tax will fall on deaf ears. And as much as I set aside my personal opinion on it, kind of right. No matter how much we picket, we rally, or we rage against BIR, at best, if we feel we want to communicate the unfairness of the train, it's best lobbied to our congressmen, to our Senate, to our industry groups. These are the forums that can best address our issues if we feel that train is unfair to the working Filipino. Now, as HR champions, and as payroll champions, I would agree. As much as we feel it is probably unfair or not, it does not remove our core role of communicating these changes to our staff, to all employees, to our organizations. If you go onto the website of BIR, the draft for the implementing rules of train income tax is actually there. I would highly advise that you go through the draft with your team alongside your finance or your accounting team. Go through the mock scenarios, go through the mock calculations. Have each member of your organization calculate their own income tax and compare it to their past income taxes. Interestingly, I had a conversation yesterday, just before I left for the day, with one of our very young, very active HR technology consultants. She came to my office and she said, Lai, I have a question on my payslip. Okay, I said, will I be happy about that question, or will I be slightly irritated with that question? I have to say, I'm only human, and sometimes when people repeat their questions, it gets irritating to a point. So the question was, I took home a bigger pay than what I used to. So I said, take out commissions, look at your basic income with your de minimis. Is it still bigger than what you used to take home? Yeah, by how much? Slightly 2,000. Okay, are you happy with that 2,000 or not? Of course I'm happy. And she asked me why. I didn't do any overtime. I didn't put in any premium hours. Why is there a change? So I looked at her and I said one thing: train. Right? Because if you look at the categories, if you look at the brackets, my opinion would be those who would feel it the most would be single employees, because of the removal of 32% tax as compared to before. So to all you single ladies and gentlemen out there, homework for you is to do your own mock income tax computations. Okay? The third part that was interestingly discussed yesterday is on train. There is a section there that was vetoed by the president. Now, vetoing power is vested in the president under Article 6. Okay? So the president has the power to veto any appropriation, revenue, or tariff bill. Now, just for me to be safe, let me directly read what was vetoed. Now, the direct veto of the president was about reduced income taxes rate of employees of regional headquarters, RHQs, and regional operating headquarters. The direct veto was, in the past, employees of such organizations enjoyed what you would call a tax break or a preferential rate in taxes. Okay? Under train, because of that veto, employees under these organizations will now be subject to the same regular tax rates as all other companies. Of course, without prejudice to any existing international tax treaty. Again, if you want details of that, if you want the exact words, the exact paragraphs of that, I'd highly advise that you go onto the BIR website and you look at the draft revenue regulations of the income tax segment. Why is that an interesting part of the conversation? It's because this benefit now for ROHQs or offshore banking units could impact, according to a lot of people in the industry, could impact the flow of foreign investment or business continuity for a lot of foreign-owned or foreign-funded companies in the country. A deeper discussion of that will come in the next videos, because it will entail talking about the overlap with corporate taxation. Now, this is A disclaimer I put out there, I'm not an accountant, I'm not a tax professional, I'm an HR and people's champion. But if you have any questions on this, please feel free to feed it on our HR Innovators group. Send them in so we could actually prepare and ask the experts answers to those questions you might have. Interestingly, when you compare the veto to a report from the Bangko Sentral ng Pilipinas, BSP reported that in October 2017, last year, foreign direct investments rose from 600 million to 2 billion, right? A lot of people in the industry right now are now seeing, would it conflict? Will that growth in foreign direct investment be affected by the direct veto? The answers to that we will give to you in the next videos as we talk to our resource persons and as we talk to the experts. How will that affect employees of ROHQs? How will that affect investments into the country? How will that affect your organization if your organization right now is an ROHQ? Okay? So again, ladies and gentlemen, it's a new year. With the new year and with anything that happens, change always comes. So whether we like it or we like it, we can't rage against the machine that actually feeds us. So it's best to look at the changes and see how would that affect us in our growth with our organizations. So one, in the next videos, we'll talk about train more about the implementing schedules, the implementation details. Two, how we communicate the changes in train to our organizations, to our employees. How to help them calculate their own taxes. Now, incidentally, if you want to do that in a more automated fashion, go on to Sprout Solutions. We actually have our tax calculator there. On that calculator, you would have a way of distinguishing and comparing. So go on to sprout.ph and on there /tax calculator, you're going to see a very close to comparative way of seeing how your taxes are affected from the previous calculations to the present calculations. And a third point we'll be discussing in next videos in more detail would be the direct veto. I've been asked questions already about how would ROHQs or offshore banking units now calculate taxes. Would their employees, specifically their management level employees, would they lose the fringe benefits? Would they lose a lot of compensation items? Of course, in keeping with DOLE standards, diminution of benefits is not allowed. Okay? So if I were to answer all of those questions in this session, well, we'd have breakfast, lunch, dinner, and another breakfast together. So I would highly encourage that please join us in the conversations, join us on HR Innovators. Feel free to post your questions there. Go on to sprout.ph. Feel free to use our tax calculator. Send us a PM, post on our page, and we will highly engage those questions. If it's not a question, share with us your views on train. How is it working in your organization? How are the adjustments with your employees? Are you having a difficult time? Is it easy breezy? We'd really love to know about that. So it's an exciting year for all of us, to say the least. We hope that you join us in this journey as at the end of the day, we try to make business better for everybody in the Philippines. Not just business, but the lives of all the employees that we work with and the organizations that we work for. Again, this is Lai, Head of People Operations for Sprout Solutions Philippines, a software tech startup that provides HR, payroll, recruitment, and data insight solutions.